we're starting out today a little bit better than the weekend. This weekend kind of sucked. A lot of you guys may have watched my Sunday walk video. I was a little frustrated. I know a lot of you guys are frustrated, but the frustrations will come to an end. And I'm going to tell you why. Right now, we're at 58.7. So I was looking at, like, I ended my Friday stream around 59.1. So we're around the same. But we did dip down a little bit over the weekend. However, this week, we do have some big things to look forward to. And I highlighted right here. I spoke about it. I mean, we do have a lot of economic data always, right? We always have a lot of data. But the biggest ones will be coming this Friday. Non-farm jobs payroll report, which will measure the jobs activity from last month, and then also the unemployment rate. These two things are very, very crucial when it comes to the next rate cut. Okay, and that's coming this month. This month. I'm sick of saying, oh, it's coming next month. No, it's finally. It's this month that we will get the very first rate cut in the U.S. since 2021. Since 2021. It's been years. It's been years. We've been held at these elevated rates for a long time. So we know it's coming, but it's at 50 basis points or 25 basis points. So this Friday's reading of both will help Powell decide which way to go. Unemployment may tick that back down a little bit. We're at like 4.3%, which if you think about it is quite high. If we tick up in a surprising move, that will definitely cause Powell to think about the 50 basis points. Same thing with the non-farm payroll basic jobs report. If it comes in way less than expected, that will also help. If both comes in better than expected, well, then it's not going to help push towards the 50 basis point. But still, right now, if you look at it, it is 100% locked that we will get a cut. It's just a matter of, again, 25 basis points, which is 0.25%, and 50 basis point, which is 0.5%. Okay. Now, here's the thing. I'm talking about the U.S., right? What about those of you guys from around the world? There are going to be a lot of cuts this month. The ECB, Bank of England, China, Swiss, Sweden, Canada, Mexico, they're all getting ready to cut their rate too. We have seen a global liquidity chart starting to go up. The M2 money supply is starting to go up. And every country around the world is kind of in the same situation where they're like, okay, this is time to cut. Economies are slowing down. And we want to follow what the U.S. is doing. And the U.S. is going to start cutting, right? So this month, we could see a lot of decisions made where we get like massive cuts left and right all over the place, which traditionally speaking is good. When you have these cuts, that is a good thing, right? It gets the money flowing. You may be wondering, well, how does the money start flowing? Well, think about it. With lower rates, that's how businesses and other banks can borrow, right, at a lower interest rate. Because no one wants to borrow at a high interest rate, but the Fed fund rate is basically what you can borrow from the Fed. And, so now businesses go to banks borrow from the Fed, it's a never ending circle. But with lower rates, it's easier to do. So that's how the money starts flowing. So this month could be quite interesting for broader markets, for Wall Street, for markets around the world. If we get a lot of cuts, historic cuts this month, that could be a very, very good thing. And of course, that translates to Bitcoin and crypto, right? So that's this month. But what about Bitcoin specifically? Well, right now, we know that Bitcoin is stuck and going sideways, and you could argue went lower. August was not a good month. Right? But here's what's maybe even worse. Historically, Bitcoin's worst month is September. And you could see, besides 2023, we had a little uptick. 2022, 21, 20, 19, 18, 17, and then also 14 and 13, all red. That's no good. That's no good, right? So, do we have to storm through the weather? Quite possibly, because look at what happens afterwards. Look at how good historically October is. Look at the greens and double-digit greens, right? That's why I tell you guys, normally if you look at a chart and you look at the halving years, the most bullish years, okay, or the most bullish times come toward the end of the year, around the October-November timeframe. But however, does this mean, this is a guarantee, does this mean that September is going to be red again and horrible? The answer is, of course, no. I just got done talking about, we're going to have, since basically 2020, we've been getting elevated rates and we've been getting rate hikes, right? So all these years that we were in red, a lot of it had to do with the rates being added, not just in the US, around the world. And for the first time since 2020, we're actually going to get cuts, right? So even though it looks bad right now on paper, we have a lot of macro factors that you got to factor in. If the money starts flowing, which it will starting this month, things can change drastically, right? So it's not for sure, but we'll see. And of course, we got other good things happening too, not just the rate cuts, right? We got a lot of good things happening. But right now, as it stands, Bitcoin is still in a very fearful level at 26. If you look at 26 and you go back, yeah, we hit 26 a few times, but we haven't really seen 26 for years, since the low in 2023, right? Or 2022, 2023. We haven't really seen this level for years. So, normally speaking, when you see extreme fear, that's when, guess what, we turn around, right? Kind of like what we're going through right now.